Hey everybody, and welcome to Stock Abilities. I'm going to be covering the Naked Brand Group. I've covered it numerous times before, so check out the other videos in the playlist. Now, there's been a lot going on with the stock here. A lot of people are saying the merger isn't going to go through. Other people are saying it definitely is. I'm going to clear up some things here, and I'm still pretty bullish on this. I just haven't had a chance to post up a new video, but I'm getting to it today. Now, as you can see, the price is a little bit down. It's been kind of fluctuating up and down, and then a little bit of a crash here. The main reason there hasn't really been a lot of news lately. Now, it does say 185 in the after hours, but the reality is it's still pretty much around 190. There hasn't been much of an after hours volume going on. I'm going to be covering the earnings report as well as the conference news that came out of seemingly nowhere, and it's interesting. I'll be getting that in just a little bit, so make sure to like, share, and subscribe to the channel. Going a little bit further here, as you can see, the Naked Brain Group announces the fourth quarter and fiscal year results. Overall, they're not the best, but they're not terrible either. They're better than last year's, which is the most important thing. Now, it did react to this initially in the pre-market, went to about 250 in the interesting ask portion, but it only hit up to 230, and then it crashed down back into the open. Most people were looking more forward to the merger and not the earnings report, so that doesn't really surprise me. There isn't much dilution that they can do anymore at this point. All the offerings are done, everything's cleared up. It's essentially, we're just waiting on the merger. It goes into details here. If you guys want to read it, you can check it out right on their press release there. A lot of different specifications. Nothing too exciting to read about in that portion. Um, the other thing here is that the recent announcement around noon at the time of May 1st, they announced that they're going to be presenting at the annual Joseph Gunnar Pioneers Conference. Now, what's interesting is that this just focuses on only David Hotchman being present rather than the two previous people in the other conference. So that's something to keep in mind. It's a very weird, kind of a last minute thing, probably a filler in thing, so I wouldn't expect that you're going to see a merger announcement or anything like that, but you should see some maybe potential institutional buy-in interest, that kind of thing, so keep that in mind. Going a little bit further, you can view their webcast through the IR calendar, and you go here, Joseph Gunnar & Co. LLC Pioneers Conference, and then at 11 you just click in, and then it brings you to a page like that. Going a little bit further, this is the Joseph Gunnar website. As you can see, they're more about attracting IPOs, investments, interest, things like that, more kind of an institutional buy-in focus. Found this part of their page especially interesting. In our global equity capital markets, team is dedicated to equity transactions, including IPOs, follow-ons, pipes, privates, and SPACs. With access to more than 10,000 institutions of all sizes throughout the US, Europe, Israel, Asia, and South America, we have the ability to source and place large blocks of stock. That is very interesting to note. So you might be seeing an institutional buy-in. Other thing to note, there's 19 IPOs completed as left leader, sole book runner since 2013. They got a lot of experience in marketing this kind of stuff, and a lot going on in regards to the conference. We'll see what happens tomorrow. It's very vague as to what exactly they're going to be talking about, but I will definitely be listening in. This is just some miscellaneous stuff in regards to the 10K. I'm just going to be covering other stuff. A lot of the directors are labeled as independent directors under the applicable listing standards of NASDAQ. Our board of directors has determined that each director who currently serves on the audit committee is independent under the applicable listing standards of NASDAQ. This is probably more of a budgetary and an SEC compliance aspect, so there isn't much to really think about in that regard. We're going to go a little further rather here. As you can see, this kind of covers the salaries that each person gets paid. As you can see, they don't really take in that much of a salary as compared to some of the other companies you might see. uh, 400,000, 260,000. Joe Primus, 129 and 164. You got Michael Flanagan, 128, 200. You got Carlos Sierra, 181 and 175. And Kai Jun Lin, I'm probably mispronouncing that, at 136,000. These aren't exactly super high end paychecks, so that is something nice to consider. Of course, there's option awards as well. And going a little bit further, you go in the employment agreements of Hutchman based on a base salary of 400,000 per year, and she waived her salary, which is very nice of her to help maintain the compliance for the SEC so that they can push this merger finally through. And as it stands, and received only minimum wage for that period. Then a sign-on stock options grant purchased 1.4 million shares of our common stock, equal to 20% of our issued shares of common stock on a fully diluted basis during the final closing of the private placement in July 2014. Then it goes when the exercisable price is 512 per share, and vesting in equal monthly installments over a period of 3 years. As I covered in another video, you're going to see throughout the different options that a lot of them fall in the 387 to 529 range. 529 is the warrant price, so keep that in mind. You're going to expect some dilution at that point. There isn't much else to cover in this aspect. We're going to jump on to the next one here. A lot of it's more boring kind of stuff that essentially she has to hold X number of shares for X number of time and compensated in certain ways, blah, blah, blah. Nothing too exciting about that. Some other new things that popped up. They came up with an audit committee, and our board of directors has determined that Mr. Hayes qualifies as an audit committee financial expert. This is the guy that's been doing all the SEC regulations, probably getting a lot of headaches from it because of all the delays, but he's trying his best, and IPOs are a lot of work. Then you got the compensation committee, and all of the members of the compensation committee are independent directors. I mentioned that a little bit earlier. This goes in a little bit more detail if you guys want to read into it. There isn't a whole lot of excitement in this area here. The compensation committee can delegate to other members of our board of directors or an officer or officers of the company the authority to review and grant stock-based compensation for employees or who are not executive officers. So these are the people that are like releasing the grants and all that, determining those pricings and all that stuff, and while trying to maintain within SEC rules and all that. These are the people to maybe look into a little bit more in the background history of all of that. So you can read more about it in their filing. It's all listed right there. And just a little bit further here, just some miscellaneous compensation aspects. Not a whole lot going on here, just a little options award of $14,000, which is relatively small for a company of this size, so not a lot of excitement there. Going a little bit further, something else to note that during fiscal 2017, the Naked brand says we expanded our essentials collection to include loungewear and Peruvian Pima cotton, a superior cotton that is prized for its softness and breathability. We also introduced a new product called the Naked Shield, which incorporates special fabric featuring Circuit Text technology that provides wireless shielding and antimicrobial antimicrobial anti-odor properties. So that's something very interesting to note. I didn't recall reading that previously, so that is something that might bring some extra earnings into the 2018 year and help with Bendon to expand even more the brand, because Naked's not just going to go away. Bendon actually wants to help expand it into the U.S. markets, and they have the budget to do so. There's some other things covered here, but not a lot new in the women's collections aspect. A lot of that happened during when the HSN thing happened, so keep that in mind. And then go to the next one here. Just some other random earnings report things to note. You got the insurance expenses decreased mostly due to the change in the way insurance was being expensed. You got filing fees have decreased. You got the travel expenses decreased. You got warehouse management decreased. You got all of these things decreased. So they're definitely making a good effort on decreasing all of their costs, which is interesting because they were working on getting a larger building and a larger staff and all of this. So overall, you can see they're trying their hardest to reduce their expenses. And we're going to skip here. That just goes into different details. This one in particular I found interesting. It tells you about why the particular board members were hired and why they want to keep them into potentially Bendon. And as you can see here, they each go into details about the benefits of each one, like 30 years of experience. You got Joe Primus, President, CEO, and of subsidiary since its inception in 2010, and then it goes into details about his career as well. Then you got that why he's qualified for the board of directors, and then you got each person here, they're highlighting, kind of going into details here as to why they believe that they're qualified to serve on our board of directors because of their 18 years of venture capital, entrepreneurial investment banking experience, and describe above, and then it goes into details, and then Andrew Kaplan and all these people goes into all the details and all of the qualifications, and a lot of these people are very, very overly qualified. Something to note here is that Justin Davis Rice is listed right underneath everybody, so it's kind of already combining everybody together into one company. So altogether, you got roughly 100 years worth of experience in the clothing industry. So there's a very strong possibility this merger will go through. Of course, there is issues and scenarios that if it does not, this is something to consider, that if the proposed merger is not completed, they are subject to the following risks: costs related to the merger. If the merger agreement is terminated under certain circumstances, we may be required to issue Bendon 2.5 million shares of common stock, and then other things like the attention of our management may have been diverted to the merger rather than to the company's operations. Next, could have been beneficial to it. The potential loss of key personnel during the pendency of merger, as employees may experience uncertainty about their future roles with the combined company. Then the price of our stock may decline and remain volatile, and we may be subject to litigation related to the merger or failure to complete the merger. This is just standard clauses, doesn't really mean anything, but it is a risk you take when you participate in a chance for a proposed merger. Other than that, that covers pretty much everything I wanted to cover in this video, so make sure to like, share, and subscribe to the channel, and have a nice day.